You're talking about the U.S. economy. What is going on? Explain this a little bit more.
I talked about the debt problem, the debt spiral. At that time, Pomp, we had $30.7 trillion of debt. Flash forward 2 years later, it's almost $5 trillion more than that, $4.7 trillion more in just 2 years. And so what is the problem? The problem is we spend too much. You can talk about taxes. You can talk about trillionaires, billionaires, millionaires paying their fair share. That's not the issue. The issue is that we spend too much money. And when you do that, and you have less productivity out of it, and you're wasteful. You're just wasting money and spending on, proxy wars or green energy that is not productive. It's just not, it doesn't give you the same unit of productivity back that you're spending for. Eventually, you just have to spend so much that you have so much debt that it just collapses on itself. That there's a tsunami of interest payments and debt that you have to take on, that you eventually as the world reserve currency and asset, you eventually lose confidence from your investors globally, worldwide, because you're debasing your underlying currency so rapidly to keep up with that. And we can go into that because, what I like to do is kind of keep things simple. So we can talk about more of that too.
How do we actually get people to stop spending so much?
Yeah, well, the problem is we're literally in a debt spiral. So let's pull way back to 100,000 feet. If the U.S. Government was a company on the floor of the New York Stock Exchange, for instance, they would be considered a zombie company. Why is that? It's because they're not generating enough income to pay down their debt. They're not even generating enough income to pay the interest on their debt. So let's just kind of talk through it with numbers so people can understand. And these are all numbers that come from the Congressional Budget Office. They do reports periodically. This is from earlier this year. They're estimating what 2024 was going to look like. So we use their numbers, even though they're worse than this from what I can see so far through the third quarter, through 10 months or almost 11 months of operating. So they say that, okay, so the run rate tax revenue that we expect we're generating about $28.5 trillion of GDP so far. And they expect to take in $4.9 trillion of taxes. And that's just money that the government is taking from our productivity. They're not generating anything. They're just taxing that, right? So the tax revenues are $4.9 trillion. But the problem is that we spend $6.9 trillion. Okay, so you think, okay, so the deficit is $2.1 trillion-ish, $2 to $2.1 trillion. The issue is that we're a zombie because all of the programs that we're paying for that are mandatory, they're signed into legislation. They have to be paid. If you don't pay them, it's a form of default, right? So the programs we're talking about that are mandatory are Social Security, Medicare, Medicaid. You add that up, according to the budget, that's $4.1 trillion. Okay, so now you remember, we took in $4.9 trillion. So we've just spent $4.1 trillion. That's out the door. Our defense spending is estimated to be about $900 billion. It's probably closer to 950. And it's probably even more than that we're not even seeing, right? So they're kind of tucking some away in other areas of budget. But let's call it $950 billion. Okay, so now you're over budget already. So now you're over $5 trillion of spending on $4.9 trillion of income. But we haven't even gotten to the most important part when you talk about debt, which is the interest on our debt. So we're paying over $1 trillion of interest. We're getting some of that back through intergovernment agencies and debt between government agencies. But let's call it's about $900 billion of net interest per year that we have to pay. We don't even have the money.
Over 50%, under 50%? Or are there other ways you think about, taxes being raised too much where it actually starts to hurt the economy?
Yeah, I mean, it really depends on where the taxes are being taken from. You're taking them from small people, you're talking about 50%. Yeah, that's a big mental barrier. You're talking about companies. I mean, where is their efficiency? Where are they able to continue to grow and keep their margins and in order to incentivize them to keep keep in that business, to stay in that business instead of go someplace else where there are higher margins. And this is part of the reasons we're so financialized, because there are high margins in financial businesses. So, it really does depend on the underlying economy and what that productivity is. And what they could do is divert some of the wasteful spending to productive spending. Trump says, drill, baby, drill. Yeah. Spending on energy, that's a good thing. Spending on nuclear energy be a great thing. You get a ton of productivity out of your marginal dollar invested there. You see it in France. The GDP per citizen has exploded in France because they've stayed with nuclear. They've expanded it, as opposed to a place like Germany where it's collapsing per citizen because they're shutting down nuclear. That's not just one thing, but they're not energy independent. Having energy independence that's a big deal. It's important. So spending on programs and spending on infrastructure that is productive, that would be a big deal, and that would help that underlying productivity and grow that GDP healthily. But right now we're not doing that, and that's the problem.
When you look, if we go back to the national debt, the debasement of the dollar is to monetize the debt. Describe what are the kind of scary end, outcomes here.
Because the US dollar is the global reserve currency, and the US Treasury is the global reserve asset because of that, because countries, sovereigns, central banks have to hold treasuries in order to have access to dollars. They need dollars. Everybody needs dollars. Because of that, this can go on for a very long time. This is the U.S. and our currency and our debt is still going to be centerpiece for a long time. I want to make that clear. I don't think that we're going to collapse in the next few years. That would be catastrophic. It would be damaging to the entire world financially. I think that would be terrible. But what can happen? We've seen things that have happened in places like Zimbabwe, Lebanon, Argentina, Venezuela. You've seen hyperinflation occur. That is the ultimate end game of this, where the debt, this is where the debt collapses on itself in the future, that it just becomes such a large burden and load that you have to issue so much debt just to keep the charade going that eventually it doesn't even matter that it's the global reserve currency. The investors lose confidence in it and they stop buying your treasuries. They stop buying treasuries at an interest rate that allows you to continue to perpetuate the game. And so that's ultimately what happens. When does that happen? I think it's decades down the road, at least. Personally, we can keep this going for a long time. So, but you're talking about something called, what you're talking about default. I mean, we have a hard default would be if you just stop paying interest on your debt, stop paying the principal back. We've seen other countries do that, and they have a reset, or they pay 30 cents or 20 cents or 40 cents on the dollar to that debt to reset it, reset the currency, and then start going again. It's a painful period, but then you have a lift off again. So I talked about it early on when the Fed started raising rates at a breakneck speed. Like they raised rates from just about ZIRP, to 5.5% on the upper bound. But let's go back. So the Fed has basically, it has two mandates, right? The first mandate is stable pricing. Well, they define that as a 2% target inflation rate. That's what they say. And the second is maximum employment. There's no real target there. It's just as much employment as we can have. Does it feel right? So is it 4%, 3.5%? So they would argue now it's less than 4%. So, when they raise those rates, though, the issue is that a lot of people thought, well, they're going to raise rates. It's going to cause a collapse. Like things are going to start breaking. Credit markets are going to go to hell. You're going to have something's going to break. It was the big phrase that everybody was using.
Why do you think Bitcoin is the solution to this problem?
Well, long-term solution because it's an asset that can't be printed. It's got a finite supply. And so in the year, as you know, 2140, the last fraction of Bitcoin will be minted, created. And so we know how many is going to be 21 million Bitcoin. That's the finite number. It's completely decentralized globally, and it's immutable. And so the reason that it would be a great reserve asset, and I think it's going to take time for central banks to come around to this. This is not going to happen next year. Trump talks about adding it to the balance sheet as a reserve asset. Maybe it will happen. Maybe it won't. It will take legislation, a lot of fighting. It could take all 4 years if he's elected. But more likely is that down the road, there will be central banks, smaller central banks like El Salvador doing what they're doing and adding it to their balance sheets. And so why is that good? It's because it can't be expanded. It would be like going back to the gold standard before Nixon took us off that. And if you go look at those charts and on inflation, expansion of the money supply, they skyrocket. They go exponential after 1971, after we were officially taken off the gold standard. We would return back to a standard where you couldn't just print Bitcoin to make up that debt and to create inflation to manage it. And so it would be a good thing because it would keep inflation in check. And actually, ultimately, you could allow for natural deflation from creation of technology and advancement of technology, especially in a world where in the next 5 to 10 years, we could see AGI, artificial general intelligence, which would arguably be smarter than certainly me. And so, all of us. And so that would be something that would be incredibly deflationary, where the productivity per citizen would go up so much that we'd be allowed to benefit from that deflation, where things would cost less. We don't have to pay as much. We don't have to work as hard to have all this wealth around us. It would allow for that. And so that's why I think it's ultimately the most, it's the most humanitarian solution out there, in my mind, long term. But it's going to take a while to get there.
What about stablecoins? Like stablecoins feel like they obviously are, competing somewhat in the monetary system. I think people would generally agree Bitcoin is a great store of value. Stablecoins are being used more for transactions. And so how do you see them playing in? Are they competing with Bitcoin? Are they competing with like a traditional dollar?
No, they're really important right now because you have you take your US dollars, you put them on an exchange to go buy Bitcoin. Well, you need something to buy, unless you're buying the ETFs, which is a whole nother conversation. But if you're buying them in a crypto exchange, then you use that tether to hold your dollars or euros or whatever it is. And I don't see it as competing as much as enabling people to get into Bitcoin.
Do you worry about central bank digital currencies? Do you think that they're a strength, a weakness, or a potential risk?
They terrify me.
Why?
Because they can be controlled right down to the transaction. So we've seen an agenda in Europe, especially in Australia, that wants to control what the citizens are doing and how they're acting. Recently, there's a proposal, or they're floating a proposal to tax people 15 cents per mile they drive in the UK. They've talked a long time about carbon taxes and carbon. NatWest Bank just launched a credit card that warns you if you've spent too much money on things that expand your carbon footprint. You've bought too much meat this month. You flew, or you bought too much gas. So, just FYI, well, that's the first step, right? And you see in China, they've got central bank digital currencies, a currency, and they can control whether or not you have access to that because of your social credit score. In fact, we've seen reports where people get warned that they're too close in proximity literally physical proximity, too close to somebody with a bad credit score, they better get away from them, or they won't be able to spend their money. They'll go up to a vending machine or a restaurant or whatever, and the money just is locked. They can't use it. So why is that scary? It's scary because that gives the government or whatever oversight entity the power to say, nope, you've bought too much meat this month, and so you can buy grains, or you can buy these this insect product, these cricket chips or whatever. And so, or you've traveled too much, or you've left your 15-mile radius too much. You literally can't go outside your 15. Your money is not good outside your 15-mile radius if you've gone out more than So it's really insidious. I don't see it as a good thing. And I don't see it happening here in the United States anytime soon.